Now joining us for a property sector focus, because there's been a lot happening in this particular space, is Kundayi Munzara. He's the director and fund manager at Sesfikile Capital. Of course, Byron Lotter from Investec is still with me at the desk. Kundayi, let's take a look at the sector. If we look at property or listed property versus the performance of the all share, what have we seen? Has it outperformed?
It has. Listed property this year to the end of July has done about 12.2% versus equities that have done about 6%. So about double in terms of outperformance, or 600 basis points in outperformance. Our view on the sector, we actually expected for the full year, we expected the other way. We expected equities to outperform property this year. And at a 6.6 forward yield, our view is that the sector is probably a bit steamy at this point.
I recently finished Mark Wayner's book on the mark a few weeks ago, and one of the points I picked up was that Redefine specifically are only going to focus on the central areas for the likes of Sandton and Pretoria and Cape Town, because operating out in the more rural type areas, he said, is extremely difficult. You know, there's so many officials you have to get through. The municipalities are impossible to work with. So those listed businesses that are more operating, you know, shopping malls out in the rural areas, how have they been faring? And do you agree with that redefine mindset about sticking with the higher end areas?
I agree with it for different reasons to what he's highlighted. I have read the book as well. He's highlighted it on the basis of inefficiencies of working in the outlying areas. I agree with the move on the basis of actual affordability being higher in the bigger towns. I think Redefine, that's their own strategy, and it's something they will do. But we also have the likes of Resilient and the whole Fortress Group, and all of those guys have built shopping centers in the outlying towns, and they've been doing well. Interestingly, Redefine just built a shopping mall in Klerksdorp called Matlosana Mall. So irrespective of what he says in the book, they just opened a shopping center in Klerksdorp.
Kundayi, what are the other trends? Because you speak about outside or outlying areas where we are seeing shopping malls being built. Other trends that we should be aware of?
Trends in terms of the South African market, we've always favored, at Sesfikile Capital, we favored the retail sector over the last couple of years. We thought it was much more defensive and the consumer was doing well. But at this point, we think that we're starting to get into a situation where we may have oversupply of shopping centers, and we think that turnovers will start to go lower. It's the first time in a very long time that we're starting to see a bit of pain coming in the retail sector. We're also starting to see, or we're seeing more consolidation of bigger companies. Quite recently, you mentioned Redefine. Redefine just effectively finished buying Fountainhead on Monday, so that deal is done. And we've just seen an offer by Fortress for capital, so it's going to be two fairly large companies into a mega company, I guess.
And in terms of the commercial property side, I mean, it's no secret, it's pretty obvious there's buildings going up all over Sandton. But now, obviously, Sasol's old building's going to be empty, Discovery's old building, Old Mutual. In terms of supply side and the demand for that commercial property, where do you see that going? Do you not think maybe there's a bit of oversupply at this stage?
What's interesting is that, and you're absolutely right, and we call it musical chairs, and that one big tenant moves, let's say Sasol moves out of Rosebank into Sandton, and that space is left vacant. We think there's certain fringe locations that will be, it'll be winners and losers in this economy, and we think areas like Woodmead are probably going to be the worst affected. I think Rivonia is going to be badly affected as well. Another issue worth pointing, though, around the supply picture is that it's actually looking better than it did about 18 months ago. So before, we had about 800,000 square meters of space under development. 800,000 square meters, about 6 Sandton shopping centers of office space being developed, and less than 60% of that was pre-let. At this point, we have only about 30% of it that is speculative, where 70% of it is already pre-let. So if you see the cranes, it does look like there's a lot happening, but we actually look 12 months out, and it actually looks okay from that perspective.
Kundayi, we're going to pause this discussion. We'll be right back. When we do come back, though, we'll look at how macroeconomic factors play into this property space and investment opportunities. A specific focus now on the property or listed property sector. Kundayi obviously is still with me, and Byron is at the desk. I said we'd pick up with the macroeconomics. South Africa is in an interest rate hiking cycle. Of course, we're taking cue from what's happening globally. So the impact this is going to have on this particular sector.
It will have two impacts. Short term, the impact will be on the actual prices, the listed property prices. And that's why we say the current bond yields, broadly at about 8%, and the listed property sector gives you 6.6 as a yield. In an interest rate hiking cycle, we would expect the bond yields to also start rising. And if that happens, we expect the yields on the listed property sector to start rising as well. And the immediate impact is that we expect a bit of a correction as interest rates start to rise in the listed property sector. So at our side, we are expecting around 7 to 10, maybe 7 to 12% correction. Unfortunately, you can never time it. No one tells you the day it will happen, but this is what we expect on our side.
Just going to more specific stuff. So residential, we haven't really touched on. We've just seen a recent listing.
Yeah.
Arrowhead are getting involved. In the likes of Rosebank, they're converting a lot of big buildings into high-end residential apartments.
Yeah.
Are any of the big listed property companies getting involved in that? And do you expect a big shift to residential going forward? Is that the next big exciting play for the property sector?
Yeah. Is that the specialization coming in? I think just piggybacking on what you just said.
Yeah, it's two things. So the residential sector in South Africa is probably about 2 or 3% of the overall listed property sector. If you look at the US, it's about 16% of the listed property sector there. So we think that there will be a natural move towards that number. And the residential sector is quite attractive in this economy in that the demand, it's much more dependent on demand and supply as opposed to what's happening in the economy. It's got a slightly different return profile, and asset fund managers do like the sector because it offers that. To answer your question, Redefine is doing a development in Rosebank, a residential development as well. So Indlu Place is the one, the listing that came out. It's done very well. It's still quite small at this point, but from management side,
that's more cheaper type residential in central Joburg.
Not necessarily. Not necessarily. Some of it is that, but the rest is you'd say affordable. So 4,000 to 5,000 rand for a 2-bedroom unit per month. So it's not necessarily low income. It's not necessarily CBD, but it's in between. It's not high end either.
Offshore opportunities, seeing a lot of companies going to Europe now seems to be the hot spot.
Yeah.
Is it?
Absolutely. Europe is I think every man and his dog has got a Europe story now. We've seen before, we did see companies like Nepi. Nepi pretty much is a Romanian company that listed here in 2007. There's been a few companies that have started that strategy of going into Germany and some of the Eastern European countries. So we've seen the likes of Sirius, which is a German-based but JSE listed. Mass PLC is pretty much Great Britain. We've seen a lot of companies starting to look offshore for offshore opportunities. Our view at Sesfikile Capital is with a lot of caution. So Nepi has a lot of infrastructure. They've got 200 people working in Romania in the business, a very strong company. But the other guys we think that a lot of the guys are going to lose money being in the offshore market.
Kundayi, thank you so much for coming in. I really hope to have you back here at the desk with this particular focus. That was Kundayi Munzara. He's the Director and Fund Manager at Sesfikile Capital.